share screen. Right, now I believe I am live. Well, hello everybody. So for those of you that don't know who I am, my name is Kody Ashmore. I am Director of Weekly Option Strategies, obviously here at Simpler Trading, as you're here with me. And today's topic is basically just my tips for new traders. And I have a few, and at the end, by all means, I'd love to take some questions as well and kind of help guide you along that way. Let's see. Let me click this button real quick. All right, I'm assuming I will see questions if they pop up on the YouTubes. But cool, let's go ahead and get this started. I do have a little bit of stuff to give y'all. I did create a little slide for y'all. Let me minimize that out of the way and get my little handy dandy pen. All right, so like I said, today's session is just my tips for all of you awesome people out there. So let's talk about this for a minute here. So the very first thing that I think or believe really is theoretically like every trading plan out there, I won't say trading plan, but every trading strategy out there basically works, right? For the most part, every strategy out there works, but the question is, does it fit you, right? Being on this side of working at Simpler, like I love seeing JC and all the other traders take these really big trades, right? And they'll hit a really big winner, but the question is, like you have to ask yourself, does that work for you? Or are you more like a trader like Bruce? How Bruce is much more of like selling IV and theta, much more consistent. It's more like orchestra versus rock and roll. So that's something you really need to ask yourself. So things to consider with your trading strategy, right? Um, like when I say you need to make sure you have a strategy that fits you, I think it's important to make sure that your strategy fits the current situation, right? So like if the market gets trending again, I think the squeeze trade um, is phenomenal. If the market gets trending, a much more smoother type of less volatile. I think the squeeze is by far one of the easiest and strategies to have. Another thing you need to ask yourself also is time you wish to dedicate to trading. Some people want to swing trade, which is great. So therefore, you're only going to have to trade for maybe an hour or two at various times you're wanting to get into position, whether it be in the morning or at the close. And also your risk tolerance, right? Another one is like, do you want to hold risk overnight, or would you rather be a day trader, right? Come in, make your quick trade and be out. But on the flip side of that is you need to have a lot more discipline to keep you grounded, I guess is a way to say it. And then goals. So, like, what's your trading goal? Are you trying to, are you trying to make income or are you trading for wealth? So, a lot of that will dictate for me personally what kind of trading I'm looking to do if I'm trying to do one or the other. Oh, okay, turn that off. Okay. So another tip, I think every trader, and I'm sure you've heard this a bajillion times, you need to have discipline. You know, and if you're lacking discipline, I have a few ways to tell you how to bring it into your trading, right? So, first of all, why do you even need discipline? Well, you need discipline to follow your plan, right? Are you taking profits at your predetermined levels? Are you, more importantly, like taking your stop losses when you pick them and you're not moving, or even adding to your position at your stop loss level, thinking I'm just cost averaging, and also to make sure you're position sizing to the correct size. All that incorporates discipline, basically saying, are you doing what you said you were going to do at the moment you got in? And then if you are lacking discipline, here are a few little things you can do to bring it in. So if you don't already work out, start a workout plan. I know that sounds very generic, but there's going to be times where you don't want to work out. You're going to be tired. You don't want to do anything. Well, it's going to take that discipline for you to get up and go do it, or just start a diet. sounds easy and kind of cheesy, pun intended, I guess. um, but start a diet. It doesn't matter what it is. Talk to your healthcare provider. It doesn't matter. Just do something that's going to make you have to stick to some type of rule. And like for me, and I'll tell you how I do this for me, and you're probably going to laugh. And so, like, I already have a decent workout plan. I work out pretty regularly. I diet pretty much all the time. I am very strict about what I put in my body. Um, and then I read pretty regularly. Probably should do it more. But another reason I say start reading is because it's going to take time out of your day. There's going to be time you're going to be too tired. You're not going to want to read whatever it may be. Just take the time. It's going to take you to get. I guess the best way to really explain this is it's going to make you learn to get uncomfortable doing things you don't want to do. And so for me, so I already pretty much do all that stuff. So it's easy for me to put it up there, right? So like, what do I do to maintain my discipline? Believe it or not, what I do that I really hate doing, but I do it, is journaling what I eat. I hate doing that. Like I used to be really consistent at it, and then it was no big deal. Then it started turning to this annoying thing. Then it kind of turned to like I already know what I'm putting in, so what does it matter? But I do it because I hate doing it, and so doing that helps bring discipline, or I'm assuming it does, into my trading. So literally just journaling what I'm eating because I hate doing it. All right. So another little tip I will definitely give y'all is have a written plan. Have a hard copy of your written plan and keep it on your desk or your trading area, wherever you get as you trade. Look at it all the time. Look at it daily. In that trading plan, you need to have in there why you're getting into things, why you're getting out of things, your setups, your stock selection, your allocation. That's a whole other subject. Is like a trading plan, but it just you need to have a written plan, literally one typed up and put on your desk so you know what you're going to do. And I'll give an example reason once I get through this a little bit more. All right. So another thing is like, and this actually doesn't really go with having a written plan, but also goes with journaling your trades. So like for me, I am really big on screenshotting all your trades at time of entry because it's easy to say what you think is going to happen, but what do you think happens after you already got in? Sometimes it doesn't happen the way you thought it was. Was it the stock? Was it the market? Um, did you not analyze correctly? It could be tons of things. So there are times when you analyze correctly, but the market just didn't do what you thought it was going to do. It doesn't make it a bad trade, but you need to be able to have that ability to look at it that way. All right. So like I said, screenshot all your trades at time of entry, document why you're getting in, where you're taking your profits, where you're getting out, and journal that trade. You put me personally, I put that screenshot in my trade journal and I keep a record of it. And then I will explain this part right here as far as why have a trading plan and why screenshot and journal your trades. So, like it says, why. So for me, whenever it came to, so like I started off trading options for a firm and whatnot. And so, like when a position started going against me, and this is where I got this pounded into my head was okay, so say a position is not going the way I thought it was. I'm like, and then you start thinking. I even get questions talking in the options room or the small cap master or anything where it's like, what about this? Can we adjust this? Can we do this? Now at that point, we're just throwing curveballs, just trying to take this wrecked car and try to make it into something nice, right? But it can still just be a wrecked car. So the point is whenever things go against me, I'll look at that screenshot and I already have my plan written on there what I was going to do at the time of entry. Like I say it was a squeeze or something. And I'm like, okay, I'm looking for this thing to go higher. When it goes here, I want to do this and do that. Now, if it is not doing what I thought it was going to do, I can get out. Like I'm like, oh, it's not doing what I thought it was going to do. And then I have my trading plan, right? So say I have my squeeze set up or whatever. I'm trading. I'm like, I have okay, so this is what my plan is, and it's not going the way I thought. So what do I have here? Do I have a section in my trading plan for adjustments? Do I have? I think some of my positions would say they used to say anyways, like hold till expiration. Position sets max loss, let it ride. That's all we do. So the point is you have your reference to look at when things are going against you before emotions get there. I hope that makes sense. So like you know what you want it to do before you're thinking, oh man, I'm going to lose so much money, whatever, or thinking, oh man, I want to make so how much money you're going to make. Just use your plan and that discipline that you have before you, I guess. Hopefully that makes sense. All right. Another, I think this is my last one because So one thing I've noticed beyond this side also is like we really need to give a strategy time. Once you identify what kind of strategy works for you, some people it's going to be better just to day trade futures or trade futures. Nothing is wrong with that. I enjoy trading futures. Um, you just need to give a strategy time instead of jumping from strategy just because it didn't work out one time, two times, three times. Like you really need to give yourself time and don't go hunting for the holy grail because there are times where you are retrading a really good strategy, you're applying it correctly. It's just the market is being difficult, or you caught up in we'll say like a sector rotation, or news came out that was unforeseen. Those type of things happen, and so all that being said is you just need to really give yourself or you give your trading strategy time to play out, and then after you give yourself, let's say 200 trades, go ahead and look back at it and be like, okay, is this doing what I thought it was going to do? And right here, I just say a minimum of 3 months. I think that doing it for a quarter makes perfect sense. All right, so use Thinkorswim, Think Back. I used to do this all the time when I was overseas, learning to trade, trying to figure out what works for me. How do I want to trade? I would pick a random date. I would pick a random ticker, and then I would just go back to whatever time frame and all right, I'd be like, okay, does this have this setup? And then if it did, I'd trade that setup. If not, I would move on. All right, next date, new ticker. Boom. All right. So that essentially that was like my scanning, right? Um, so all that being said is use it to back test your strategies or to give you confidence in it, especially if you're feeling like it's not working like you thought it should be. And that Think Back is on demand, Chad. That's exactly what it is. I believe it's called Think Back. But yes, it is Thinkorswim on demand. Sorry if I did that incorrectly. Yeah. But that is it, really. Any questions at all, really, as far as how that stuff, how to implement those things? There's the things I think that are important, which you should do. Um, feel free to ask anything, really. But that's pretty much it. Those are the main things I feel that a new trader should know. Give yourself time. Make sure you're disciplined and always have a plan. I think everyone here should have a typed up written plan and you know what's going to happen if and or something occurs. How do I trade, Craig? My strategy, me personally, I have adapted over the last few months. Like for me now, I personally enjoy just doing the 0 days to expirations and a one overnight. I do overnight iron condors quite a bit, where I kind of forecast where I expect price to go, and then I also do these 0 days to expiration trades. Where I'll either do the expected move iron fly or an iron condor, or I will do the drummer free credit spreads as well. In simple terms with the Iron Condor, if I'm picking two places where I expect the price not to go, I'm going to sell it to you and buy it back for less. Simple terms right there. I pick two levels where I don't think the market's going to go, and I want to buy it back for less than what I sold it for. Sell call, sell put. Yep. An Iron Condor is a whole other discussion. There are a bajillion videos on YouTube about Iron Condors. Um, simply you can Google it, check out a YouTube video on it. But yes, you basically pick two prices where you don't want the price to go, and you click the premium on it. Absolutely. Like one, I'll use an example. Oh, I'm in one right now. We're right at the break-even point, just holding this, looking for the market to go a little bit higher. This is Iron Fly, which is basically an Iron Condor. But the only difference is, without getting too wrapped up in it, is you're wanting price to stay between a certain spot. So for me, for like today's example, this is I put this on this afternoon, or not this afternoon, but 40 minutes after the open. So I sold the SPX 41.25s, and like right here is my P&L. So as long as price stays between this cone, I make money. And as of right now, we're right down by here by the break-even point. Would like to see it rally up, but if not, say it does start to break back below here, probably end up cutting it for a loss. But we have a small risk, potential big reward, while still taking advantage of theta decay from a daily perspective. Um, All right. So, how do you develop your main strategies? Who did you learn from initially before you develop your own trading style, or just jump in knowing knowledge, just some sort of ground experience? um. Oh well, Chad. All right. So, me personally, my trading development was kind of, we'll say, all over the place. For me, I started off trading in Afghanistan. I started off with day trading. And believe it or not, like just to really break it down, I bought I went to Groupon when that was a thing and found a cheap trading class on there that I bought for like $100. Not a very good class, as you could imagine, and you honestly get what you pay for when it comes to trading. But so that's kind of like where I started, kind of give me a little general knowledge. And then I started, like, day trading has always been interesting to me. But doing it overseas was difficult. Believe it or not, I started off with like warrior trading. Whenever he was only trying to make $100 a day before he got all as big as he is now. Um, that's why I learned to trade penny stocks and all that stuff. But I learned that's pretty difficult with some poor internet that can crash on you at any moment. That is when I learned that is difficult, or the internet could go out, or a bomb goes off, or something. And so I was like, okay, this ain't working. So I started taking my own strategies and trading them in swing trading, and I got decent at swing trading. And I was okay, swing trading is not doing too bad. But I was swing trading stock. That's where I started doing the whole dark pool stuff. Actually, I started swing trading stock around the dark pool and things like that. So I learned all those methods, and I was all right. This is cool. And then I was like, man, it would be nice if I could trade someone else's money. And that's whenever I went through this whole thing of trading for a firm. And this gets to your answer, Chad. So that is kind of like where I learned my options big picture strategy. And from there, that I learned it all from the firm. That's where I developed my main stuff. So a lot of their stuff is, a lot of it is, you're basically, it's basket trading is where I started. So you have a thesis on where you think the market's going to go. Was just say you think, like, that's where I got my -3 to +3 type of scenario, where I would if I was a +3, I want to have most of my portfolio bullish. If I was a -3, I would have most of my portfolio negative. But if it was like a 0, I want it mainly sideways. Um, just to give a little example, let's just say it was a +2, right? I have my system is telling me I need to structure this at a +2. If I'm structured at +2, I want to have like 4 bulls, 2 bears, and like 3 sideways. Sideways trades. And then from there, that's where I learned the sector rotation stuff. And like, if I want to be long, I wanted to be long the strongest stocks and the strongest sectors, the weakest stocks and the weakest sectors. And that all comes down to what I was trading was like bull flags, bear flags, ascending triangles, descending triangles, range bound stuff, things like that. And then that's where I learned my options information as well, because that's an option firm. So all that being said, those bull flags, bear flags, things like that are literally just a squeeze. A squeeze just gets you in before the breakout, which is kind of nice. But that is where I kind of learned it. My main strategies was there. Then I learned to adapt that the squeeze is actually just that as well. And then now I just do my day trading stuff where I expect the price or the market not to go, and then just have risk management with that in that respect. But I didn't develop my own style until later on. Me personally, my own style is I like to have the Greeks in my favor, but shorter term has always been my thing. That's why I'm like the director of weekly strategies, right? I like the shorter term trades. I like that theta to burn pretty quickly. Um, but yeah, that's pretty much where I learned off from there. Now, so what I was talking about there, Chad, that trading plan's in the room drive right now. Here in the free room, click on the room drive, the little folder. On the search tab, just put Kody. Actually, it may or may no, it's not in there. Um, that's another trading plan. But I believe if you search top-down approach is what I believe it is, and then it would tell you how I was doing all that. So, but like you said, yeah, I would forecast not just 5 symbols in a sector. It was a capital allocation model that I would follow. So, like, if I was like a +3, Then I went like 5 bulls. It's basket trading. It's a very basket trading is a way so you have some sideways, some bulls, some bears. So like if in a bullish market, your bears are going to hurt your portfolio, but your bulls are going to take care of it. And your sideways is kind of like a meh. It's a very non-aggressive way to trade. But if you have a large account, it's okay. Um, but yes, basically you would do your sector analysis and then trade a pattern within the sector analysis. Yeah. So it's not any just 5 symbols, yeah, but it was, or it was any symbols that had the setup, if you will. But yeah. You're targeting 4,300 SPX for April. In my opinion, is the best option to trade that. I would do a butterfly if I was to do it. That's if we get it. I don't think we'll get up there. That's just me, though. So I would look for the best symbols, and that's yeah. So if you really want to think about it, and I did it with my smaller term or my when I did my rolling 5 days strategy. In a nutshell, when it comes to swing trading, you want to be strong, the strongest stocks in the strongest sector, and you want to be short the weakest stocks in the weakest sector. So how would you do that? So if we're to be like tech's starting to be strong again, right? So tech's being strong now. What could we do? We would wait for your setup in that strong sector. So, like an example would be like you would want to squeeze to develop it. Like Nvidia is looking pretty good. That's just all Netflix jumped up quite a bit. Um, things like that. So, yes, to answer your question, yes, Chad, that was it. So you have you do your strong sector, then you get your strong, yeah, strong sector, strong stock, weak sector, weak stock, because that's how you get basically the wind behind your back, pushing whatever direction you're trying to take it. Because I do have I'll get this here. We'll talk about it here. This is a little bit off of the curated subject, but since we don't have any questions about tips and stuff, so there is something that was taught to me was a 50, 30, 20 rule. So it doesn't matter what ticker it is, 50% of that stock's move is because of the market, right? And I'll just put M for market. 30% of that ticker's move is going to be because of that sector and or industry group. 20% of that ticker's movement is going to be based on I just put T, the ticker itself. So you see, you go from the top, what's the market doing? All right, market's looking bullish. Great. I want to find a strong sector. Now let's find a strong stock within that sector. No, it didn't really matter, Chad, because they all kind of move together anyways. So yeah, I didn't focus too much on that. Oh, you're welcome. All right, well, y'all guys don't have any more questions. That's pretty much all I have for tips. Like I said, I really do think it is important to make sure you have your plan typed up and that you understand what you're doing, why you're doing it, and what you're going to do if the plan does decide to change on you. And the rest of that just plays itself out. Just remember, once you're in position, your only job from there is to manage your risk. My favorite 3 tech indicators. I don't really have tech indicators. I do like technical indicators. I see the squeeze is strong. I like the squeeze. I do really enjoy using VWAP and volume profile. Yep. Well, Craig, micro voodoo lines. I've messed with them, but I haven't solidified it into my plan yet. They're RS, but I've messed with them some. All right. Well, everyone, have an awesome day. I hope you found my tips helpful. I do think they're pretty important. And I believe I'll be again in here on Friday. So have a good day, everybody. Start your week strong, be disciplined, and we'll see you then. Take care, everybody.